Good morning, everybody. So what we're doing today is going to show you how to roll over your cash flow forecast. Now, congratulations, because you've done a huge job here. We've all now got a cash flow up and running. And the next task is to basically make sure that what we're doing is on a weekly basis. And yep, it's absolutely critical. It's weekly. You have to spend probably, I'm going to say about 30 minutes max with your cash flow forecast, update it, and keep it absolutely precise. The aim here is that week on week on week, you're going to chip away at this and make your cash flow forecast just that little bit more correct every single time you do it. Now, I've got the amazing Tyson, our business analyst, with us today. And when I go like that means I'm pointing at his screen, which hopefully you can see too. And he is going to be helping us and talking us through exactly what we need to do. So Tyson, do you want to bring up the cash flow forecast we've been working on to demonstrate to our lovely clients?
Yep, for sure. Okay, I'll just open up that demo, turn on screen share, 1 second. Okay, there we go. There's the one I prepared earlier.
Excellent. Well done, Tyson. I love the way you've done that. This is perfectly like a cooking show. Here we go. Here's one we prepared earlier. Now, here's what we have, guys. What we're doing and what we want you to do at the end of every single week is you're going to roll this over. Now, rolling over comes in 3 distinct phases. Okay. The first thing I want you to do, and Tyson, if you can just highlight this, is just look at your closing bank balance. So we're using the example, it's of last week when we're recording this. And what this says here, thank you, Tyson, is that our bank balance should be 58,000. Now, what you're going to find as you do this is that every single week, you're going to get closer and closer to this number. At the beginning, you may be a little bit out because you're learning a new skill. So the first thing I want you to do is have a look at that, check it against your bank balance, and just see how close you are, all right? Because that's a reference point as to how precise we're going to be. Then what we're going to do is we're going to go to our cash out, and we'll go there in a second, Tyson, just hold your horses. We're going to go to our cash out, and we're going to go and update our cash out. Then we're going to update our cash in. And then the final part of the process is going to be showing you how to roll the data over. So step 1, go to cash out, update that, make sure it's all correct. Step 2, go to cash in, update that, make sure it's all correct. Part 3 is then rolling it over. And we're going to talk you through this step by step. So Tyson, let's go to our cash out.
Yep, sure. There we go. Cash out.
Now, what is really important, everybody, is that this is a literal record of when the cash leaves your account. Okay, so in the cash out, all of these numbers, this is literally when the cash leaves your account. And timing of payments in cash flow forecasting and timing of income in a cash flow forecast is critical. Okay, and we've got to be really, really precise with this. Now, every single week, what I'm wanting you guys to do is just chip away at this. Okay, chip away. Because the first version that we've done is all about getting the data in. And then every single week, we're just going to be chipping away. Now, just avoid overwhelm here, okay? Just think about, change 3 or 4 things every single week. It's easy. It really is easy, okay? And you will become much, much more aware of exactly what's going on in your business. Like your finger on your pulse, okay? You will love us for making you do this because you will understand your business in a whole new way by going through this process. So, Tyson, let us show our lovely clients. We're going to focus at this moment in time on your cost of goods, because your cost of goods is the thing that's going to vary most in this cash flow forecast. Now, it doesn't mean that you therefore ignore the other numbers, but we're just going to show you a little bit of technique here as to how to update your cost of goods. Over to you, Tyson.
Okay, thanks, Damien. All right, so in this example, obviously here we've got a bunch of different material suppliers in this example. Now, we're just going to deal with one of them. So we're just going to look at one particular line item, which is middies here. So obviously we've got some rather imprecise figures allotted in each of these particular weeks. So obviously we're just basically going to try and dial these in and get them as accurate as possible. Now, the best way to get this information is either A, if it's not already recorded in your accounting program, you can basically just go to the source document, which is the monthly account statement. So if we actually have a look in this particular example, here we've got middies, data and electrical, which obviously an electrical supplier. Now, if we look at the bottom of the statement, we actually know exactly what needs to be paid and when. So if we look at the aging of this particular account, we know that essentially that has to be paid in April, this has to be paid in May, this has to be paid in the following month. So we can literally plug these figures into our cash flow forecast, because this is actual information. So these are the exact payments that we need to input into our cash flow forecast. Now, to do that, we essentially just go back to our forecasts. Now, obviously, with the week that just finished, maybe we didn't particularly make that payment. So essentially, all we need to do is go ahead and update it. So here we basically put in 9872, which was we just have to look at the oldest amount first, which is the 3003. We then go forward a month and basically plan the next payment, which is the 15,008. And then if we look at another month ahead, we know the following payment that needs to be made will be the 9872. So there we go. So this here is essentially exact amounts which we're going to be making to middies in relation to the cost of goods. Now, obviously, these amounts here are going to be imprecise, but they're averages. So if we actually have a look at the averages of what we're going to be paying over the next 3 months, it's literally 9,294. So we can safely say that the payments that we're going to make in those following months it's going to be about 10 grand. Now, obviously, they're not exact figures, but those figures are okay to use when we're sort of looking beyond what we immediately know. Okay.
Beautiful. Thank you. So what I'm seeing you've done here, Tyson, is you basically, because that first payment wasn't made. Yep. And it's okay. We're just looking for accuracy. You've got to move it forward.
Correct.
And then you use the source data. So I saw that statement was a March statement. Yep. And then you've gone and picked out the March statement, and then you've gone and used the 60 days. So this is the oldest payment. And you're going to pay that one first. Yep. And then you've gone and worked it out like that. Okay, beautiful. And then you can see this is all relating to the 30-day terms. Excellent. Thank you.
Okay.
Now, let's go and have another look at another line item here.
Yep.
Which we can make more precise. Okay. Now we're going to pick the wages here, because this is another one where it's unlikely that your wages are going to be exactly that. They're probably going to vary a little bit, particularly if you're paying by the hour. So and when we just want to get everything more precise, chipping away is the language here. Over to you, Tyson.
Okay, thanks, Damien. Yeah, so as Damien mentioned, wages, that's probably the second big ticket item that consistently probably just needs a little bit more of improvement on entering the correct information. Now, in here, we basically have net wages. Now, what that is, that's exclusive of tax. So this is essentially what you're going to be transferring to your employee's bank account. So obviously, we only want to record the net. So in this particular example, we just have a flat 4,000. Now, obviously, you'll need to go and review these figures, basically looking at how many people are on the payroll, times that by how many hours they're working per week, times their sort of hourly rate, and then basically go in and fine tune these amounts. So if we look at next week's kind of, if you've got a labour budget, basically this figure could be more precise. Like it could be more closer to 4,350. Now, the second part in actually getting the data in here as well is also accounting for the PAYG tax when it's actually going to be paid. Now, if we have a look in this forecast, we've got a separate line item where ATO payments is for PAYGW, which is the pay-as-you-go withholding for wages. Now, if we look at this one, this is basically, they're a quarterly lodger. Now, most of you might be on monthly, so this, there'll be that'll basically reflect by coming up every 4 weeks. But in this instance, these figures here, so for the week ending 28th of May, this actually coincides with the date of payment in relation to the March BAS. Now, on the BAS, obviously, there's going to be GST, which is here, but what we're focusing on here is actually the wages tax portion. So obviously, because that quarter is actually finished, we know what that figure is. So that can be extracted from your accounting program. But we know that here because that's the tax on wages portion, which we have here. And then if we kind of look ahead, based on sort of averages on the net wages, we also come up with the sort of the following quarter tax payment, which is in relation to the June BAS. Now, for many of you, the June BAS won't be due and payable until this week here, so the 28th of August. So we basically allot that payment in there because we don't want to basically be putting gross wages in each line item because we're not paying it for 3 months because obviously it's only going to be paid when the June BAS, when that BAS payment actually comes up.
Thank you, Tyson. Okay, good. Love it. Love the precision here because we want to make sure that we're not. And I saw this yesterday, literally, where there was a lot of double counting, essentially. So to summarize, net wages is the amount of money that leaves your account to your employee's account. Okay, and we do not want to be having a number which includes, because sometimes people do this, they literally have super and PAYG and the amount that they're paying their employee all in one line. Not good, not precise enough. Also as well, just remember, as Tyson did, week to week, if your wages are going to be a little bit more or a little bit less, because sometimes they might be for whatever reason, just make sure you're changing them and just make sure you got the timing of the payment, because this is all about the timing of payments, the timing of income and the timing of incomings and the timing of outgoings, and putting them in the right week is essential. Beautiful. Thank you, Tyson. Let's go over to the cash in now, because we've now gone and done our bit of a fine tune on the outgoings. Now we're going to do a fine tune on the incomings. So Tyson, over to you again.
Yep. Okay. So here we got cash in. In this particular example, we've basically got our debtors, which are February and older, basically displayed here. And then we have our current sort of March onwards to today, essentially. And we've gone ahead and we've inputted everything when we actually expect to be paid for the amounts. Now, obviously, if we kind of look last week and let's just say in this example that half of these people haven't paid us yet, then obviously we need to figure out when they're going to pay us and basically input it into the respected week when we expect to receive that money. So obviously, let's just say, for instance, none of these guys actually paid last week and they've all promised payment following. So essentially what we need to actually go and do is go and move these payments. So if we actually select them and just do Control-C for copy, Control-V to paste, we basically move it and then delete it out of the previous week where we didn't actually receive payment. We're basically gone and modified. So instead of saying, look, we didn't receive that yet, we're going to receive that next week. So you're going to have to go through each individual debtor and then basically fine tune when payment should actually be received. And then also if we go and look at the sort of current debtors, you'll have to basically go through and do the same thing. So let's just assume that most of these guys actually made payment. So fair to say that, we can tick that one off, tick the following, tick everything off in this line, but let's just say there were only a couple that didn't pay. So we can go ahead and move these payments. So, sorry, if we just select that, Control-C, Control-V, and then get rid of it. So basically accounting for the fact that some people might be paying a week later, some haven't paid yet at all, but we basically need to go in and fine tune our forecast to account for the fact that money is going to be hitting the account later on.
Excellent. So great work, Tyson. Now, I just also want to point out here as well, we've got our work in progress. Now, our work in progress, you must be simultaneously working on updating your quote register and your work in progress register, because this will help you with your forecasted sales, because your forecasted sales, you'll be able to tell the more you master your quote register, the more you'll be able to get foresight on your forecasted sales. Your work in progress, the more you work your work in progress register, the more accurate this will become. I just want to point out here that clearly this one is not accurate because it's not going to be 20,000 and 10,000. It would be 23,794. But just every single week, just chip away at this, add in, take away. You may win some work, you may have some work delayed. Whatever happens, make sure you're updating it. So now essentially what we have is we've gone and got a correct version of exactly what's happening in our incoming and our outgoing revenues. Now, the final piece of the process that Tyson's going to show you is now what we need to do to roll over the whole of the cash flow forecast. So if we go to the cash flow summary, Tyson, we're going to start there.
Yep.
Tyson's now going to show you, once you've got the correct data done, then this is the final piece of the process so that you roll it over so that you've got a constant updated 6-month cash flow forecast. Absolute work of genius. Leonardo da Vinci could not have done better himself. Tyson, over to you, sir.
Okay, so basically step one, we have to basically move the date. Now, obviously 17th has gone and been, so we need to go and update this to the 24th of the 4th of the 20th. So bang. And if we have a look then, obviously that changes all of the dates there, adds an extra 7 days. Step two is obviously opening bank balance. We need to go and adjust this figure. So let's just use a hypothetical figure that prior week end of week balance was, let's just say, $65,000.
So let me just clarify this, Tyson. On a Friday, when you're updating your cash flow forecast, all you do is just put in your bank balance on that day.
Yeah, correct.
Beautiful, love it. Thank you.
Okay, so step two, obviously we've got the new opening weekly balance. We need to go in and basically roll the data in these pages. So if we have a look here, our dates have automatically filtered through. So step one is essentially we need to grab all of this data, because obviously 16th of October, that was actually the 9th in the prior. So we need to basically shift everything back 1 week. Now, to do that, we basically go and grab all of the data. So if we just highlight everything in the cells, like so, just make sure nothing has been missed or omitted. We just go Control-C, which is the copy command, head up, and then select the corner cell there, and then just go Control-V to paste. Now, once you've done that, we need to erase everything in that final column, because we've essentially just done, we haven't cut and paste, we've just done a copy. Now, we basically delete that. Step two, on the cash out column, you'll basically need to go in and sort of, obviously, there's payments that are every 4 weeks. Now, obviously, nothing has to be updated in these line items, but in this instance, we'd go and add 250 there. Obviously, maybe another 2,000 here, and then incrementally go through and basically shoot out all of these figures. Now, where you can get a lot more precise, one thing in particular that I see a lot of is a lot of car loans and things. Basically, direct debits are going to come out typically the exact same time of every month. So essentially, in this case, I don't think the only adjustments we need to make is I think this car loan here, 464, we can add that in, and then everything there. So nothing is going to be leaving the account in relation to these amounts. So that looks pretty good. So essentially, go through and do a quick review, making sure we basically have completed data for the 26 weeks. So that's good. So once we've gone and done that, we basically move to the cash in tab here, and we essentially have to do the same thing. So if we go and select all of the data, so we're ignoring that column again, we go and highlight everything over here, like so. We just do a Control-C, which is the copy command, move across to that very first data cell, Control-V paste. We've basically just shifted everything back 1 week, and then we just need to do the same thing again. Go into that final column, and essentially, I don't think there's not a lot of data in there, but essentially then we just have to plug in some new figures for that final week. Now, obviously the same thing again, you're not going to have obviously debtors unless you've got people that are going to be paying well out from when they get invoiced, but essentially that's where we can go in and put in some new forecasted and some WIP figures, which will be important for that final week in the forecast.
Beautiful, Tyson. Now, if you can just go back to the summary.
Yep. There we go.
There we go. Now, you also just noticed then there was that little uplift, as in that updates the entirety of the summary. And there we go. We've now got a beautifully updated cash flow forecast. It's now pushing out another 6 months. We do this every single week. We'll constantly say 6 weeks ahead of ourselves. The name of the game here is to make sure that that closing balance week on week on week gets closer and closer and closer. So, you know, at the beginning, I wouldn't be concerned if you're getting some fairly big gaps. And I promise you that the gap will get smaller and smaller and smaller as long as you follow this process every single week. Now, just remember, this is chipping away. And when I say chipping away, this needs to take 15, 20 minutes. It's not a big task. It really isn't a big task. And all you need to be doing is just updating a few of the numbers and making sure that it's correct. Now, as ever, if you need any support, you've got any questions or queries, there's this amazing team of the Business Benchmark Group, Stefan and myself, Nikki, Sarah, Tyson, all are here and all are trained in being able to support you with this. So if you need any help, get in touch with us. And thank you again for your time. And we look forward to seeing you on the next updated version of the How To series.